Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 3rd of April 2024. So we've just seen a drop in the dollar following the release of the ISM PMI, which came in at 51.4 compared to 52.8 expected. But it was the prices paid index which fell to its lowest level since March 2020 that caused the dollar to weaken sharply. However, we have some further important economic data coming up in the next couple of weeks, starting with the non-farm payrolls report on Friday, and then we have the USDJPY next week. So any short-term weakness we see in the dollar could well be faded because the underlying trend is bullish for the dollar. And earlier this week we did have some stronger data as well from the US, including the ISM manufacturing PMI, which came in ahead of expectations. Anyway, the dollar index is down. It's testing support right here at around 104.50ish, 104.45, this blue line here, which was resistance prior to the breakout on Monday. Now it's being retested from above. It could turn into support, leading to some further gains moving forward. However, if we close below 104.45ish, that would be a bearish technical development, at least insofar as the short term is concerned. Now the euro dollar is testing this important resistance area between 107.95 to 108.35. Here we have the backside of this broken trend line converging with the 200-day moving average as well as the 21-day exponential moving average as well. Additionally, this area was previously support and it could turn into resistance now that it's being tested from underneath. Earlier we did have some weaker Eurozone inflation data, so that could be a reason why we may not see a significant move up in the euro dollar. However, from a technical point of view, I would turn bullish, at least in the short term, should we close back above the 200-day moving average in the next day or so. If we do close above the 200-day moving average, then a run back up to the 109 handle and possibly even 110 could be on the way in the coming days and weeks. However, the trend is not very clear on the euro dollar because we've been consolidating, haven't we, for a long time now, and price has been simply oscillating around the 200-day moving average, which is flattening. So it's probably not the best currency pair to trade right now from a trend following point of view, but certainly from a range bound trading perspective, it makes it a interesting currency pair to trade. The dollar yen is continuing to consolidate inside this ascending triangle pattern following its recent upward move above the 150 handle and eventually hitting a high in March at 151.97, coming in just above the highs that were hit in November of last year and October of 2022. All of them happening just underneath the 152 handle. So the bullish consolidation here does suggest, at least from a technical point of view, that we may see a breakout above that 152 handle in the coming days. And if so, we could then see the onset of a sharp rally that could trigger a response from the Japanese government in terms of intervention is concerned in the FX markets. So that's something to watch out for. On the downside, 150.80 is the key area of support to watch, which was resistance back in February. We've broken above it and retested it in March, and so far holding above. So for as long as it remains above 150.80, the path of least resistance would remain to the upside. Gold has been ignoring the recent dollar strength and rising bond yields, and it has been going up and up to fresh record highs, and it hit a new record high today, as you can see, before pulling back a little bit. It does look a little bit overstretched at these levels, I have to say. I think if you put the RSI here, has remained above the 70 threshold for a number of days. It did dip below it slightly a few days ago, but it has been in overbought territory for a long time now. So there is a possibility we could see some profit taking on gold, which could drive prices lower. In any case, the trend is bullish, and we expect the dips to be bought. And so keep an eye on a key area of support. Previously, this was my key level at 21.45ish, which was the high from December. Gold held above that before breaking out higher. So moving forward, I think this level is going to be important. The high from this candle at 2,222. For as long as we hold above this level, the path of least resistance, insofar as the short term is concerned, will remain to the upside. Keep an eye on silver as well, because it too has broken out, and I think silver has a long way to go on the upside, although it too is looking a little bit overstretched on the short-term charts. So we could see a pullback before the trend resumes higher. Previously, silver had found resistance at around 25 to 26 area, where we have the trend line of this consolidation pattern on the monthly time frame, but now it has broken above it. So we could see silver go back down to retest this area, which could then act as support, leading to fresh gains for silver. On the daily time frame, you can see that the RSI is at overbought levels, so we could well see some profit taking at current levels, especially as it comes up to test the March 2022 highs and significant resistance in this zone. But the underlying trend, like gold, is bullish, and so I would favor looking to pick the dips rather than looking for bearish ideas on silver. Key support comes in at around this level now, which is at 25.77, the high from last week or a couple of weeks ago. This level had acted as resistance. Now it may turn into support on any potential retest, similar to how prices behaved around this area at 24.50ish, when prices had found resistance here before breaking higher, and then the pullback held as support. Keep an eye on crude oil prices. We have seen a clean breakout to the upside over here in the middle of March, before prices came back down to retest the breakout area, which held as support, leading to fresh gains. Oil is now up for the 5th consecutive day, and so it's looking a little bit overstretched on the upside. Additionally, it has already reached the 85 level, which is a psychologically important level, which may mean that prices could be hit by profit taking at around current levels. So a bit of profit taking and a pullback is not going to be a bad thing insofar as the bullish trend is concerned. But going forward, we could see dips being supported, especially this level right here at 83.12, which was the last significant resistance from the 3rd week of March, which could now turn into support on a potential retest.